Okay, let's talk about one of the hottest names in tech right now, Snowflake. You hear it everywhere. It's talked about as this foundational piece of the entire AI revolution, the company that's basically holding the keys to the future of enterprise data. So let's really get into it.
And that really brings us to the billion-dollar question, doesn't it? Is this the stock you have to own for the next decade, or is this just a massive bubble about to burst? The business itself, I mean, it looks incredible, a real market leader. But that stock price? Whew, that's a whole other conversation. So in this explainer, we're going to look at both sides of this, using the data straight from the source report.
All right, first up, let's get into the bull case. Why is Wall Street so unbelievably excited about this company? Well, the argument for Snowflake is built on some of the most impressive numbers you are going to find anywhere on the market today. Seriously.
So you see this number, 32% year-over-year revenue growth. The key word here is re-acceleration. See, after things kind of slowed down in cloud spending for a bit, this number is a huge signal that the AI boom is really starting to light a fire under Snowflake's business. The momentum is back, and it's building.
Now this might just be the most important one of them all. This is the net revenue retention rate. So what on earth does that mean? It means that if you take all of Snowflake's customers from a year ago, today, those same customers are spending 25% more. It's this incredible built-in growth engine that kicks in before they even sign a single new client. That is absolutely world-class. And this right here, this just shows you how that land and expand strategy works in the real world. Snowflake now has 654 customers spending over $1 million a year. And that number itself grew by 30% in just 1 year. So you see, they're not just adding new logos, they're making their existing customers dramatically more valuable over time. It all boils down to this really powerful flywheel effect. Once a company gets all its data onto the Snowflake platform, it becomes really hard and expensive to leave. And then, as they add more data, as they build more apps, especially AI apps, their usage and their spending just naturally goes up and up. That right there is how you build a fortress around your business.
So, if we're going to sum up the bull case, it's pretty straightforward. First, AI is this massive once-in-a-generation shift, and Snowflake is sitting right at the center of it, providing the essential plumbing. Second, the company's metrics, like that retention rate, are just top tier. They create this awesome, self-fueling growth. And third, management is just knocking it out of the park, beating what everyone expects and telling the world they're going to do even better. It's a really powerful story.
But, and this is a really big but, here's where the story takes a sharp turn. What if all of that good news, all that incredible growth we just talked about, what if it's already baked into the stock price? And maybe even then some.
And that brings us to the other side of the coin, the bear case. Now, the argument against Snowflake isn't really about the business itself. The business is great. It's all about the valuation. The price tag on this company is, to put it lightly, kind of nuts.
Just take a look at this comparison. We've put Snowflake up against some of the other most expensive, highest quality growth stocks out there. And even in this very pricey neighborhood, Snowflake still stands out. I mean, look at that forward price-to-earnings ratio of over 200. That's a measure of how expensive the stock is compared to its future profits. And wow.
And just to put that number into perspective for you, Snowflake's PE ratio isn't just a bit high. It's over 740% higher than the median for the entire software sector. A valuation like that basically means you're pricing in years and years of absolute perfection. There is zero room for error. Any little stumble could be incredibly painful for the stock.
And, if that valuation concern wasn't enough, look at what the insiders are doing, the people who know the company best. Over the last year, you've got 218 sell transactions versus only 21 buys. And we're not talking about junior employees here. We're talking about the co-founder and the legendary former CEO, Frank Slootman. Now look, there are plenty of reasons for an insider to sell, but an imbalance this massive kind of suggests that the people on the inside think the current price is a pretty good time to cash in.
Okay, so beyond the sky-high valuation, the other huge risk here is competition, and it's getting more intense by the day. Snowflake isn't just operating in its own little world. It is smack in the middle of a data war for who's going to control the future.
And its main rival, its arch nemesis, is the private behemoth Databricks. So while Snowflake is guiding to a very solid 27% growth, Databricks is reportedly growing at 50% year over year. And here's the kicker,
Databricks' whole history is in data science and machine learning, the very heart of the AI boom. This is like the heavyweight championship of data, and believe me, the winner is far from decided.
And of course, we can't ever forget about the giants in the room: Amazon, Microsoft, and Google. They all have their own competing products. And remember, they own the actual cloud infrastructure everything runs on. That gives them a ton of power to bundle their services together and get really aggressive on price. It's this long-term threat that you just can't ignore.
So how do we square this? How do we bring together these two really powerful but totally opposing stories? You've got this undeniable bull case, but these risks are very, very real. Let's pull it all together and get to the final verdict from the source report. Snowflake is really the textbook definition of what you'd call an investment conundrum. The company is fantastic, no question. It's a leader, it's executing beautifully, and it's riding this huge AI wave. The thing is, the stock price already knows all of that. You're being asked to pay a price today that assumes everything is going to go perfectly for years and years to come.
So the whole investment decision really comes down to balancing these two things. On one hand, you've got this market leader with amazing financials, sitting at the dead center of the AI universe. But on the other hand, you've got a nosebleed valuation and a really fierce, faster-growing competitor breathing down its neck.
And because of that tricky balance, the final recommendation from this analysis is a hold. The risk and the potential reward at this current price just seem to be pretty evenly matched. It's an amazing company to have on your watch list for sure, but maybe not a screaming buy at this exact moment.
And that really brings us to the ultimate question you have to ask yourself. There is absolutely no doubt that Snowflake is a great business. But the critical question for an investor today isn't about the quality of the company. It's about the price of the stock. So the question is, what price are you willing to pay for greatness?